Battery maker Exide is up 1% after its electric mobility arm EESL executes a binding term sheet with car makers Hyundai and Kia. As part of the deal, Exide will supply and produce battery cells and packs for their electric vehicles.
Amara Raja also signs an agreement to supply glass matte battery technology to Hyundai and aims to launch its first electric vehicle next year.
Healthcare service provider Sagility gains after Jefferies initiates coverage with a buy rating and a target price of 52 rupees. The brokerage expects EBIT margin to nearly double over the next 3 years to 16.5%.
BASF rallies more than 7% after the board gives its in-principle nod for the demerger of its agri-solutions business and a separate listed entity.
International Gemological Institute marks its debut on the D Street today. The stock lists at a 22% premium at 510 rupees versus an issue price of 417, now settles just under that 500 rupees mark.
Hello and welcome to Chartbusters. I'm Nigel and with me is Mangalam. It's a Friday morning, but just take a look at the volatility on the screen. We were up close to 100 points in early morning trade. We are down 100 points as well. So you've seen a big range in today's trading session. The headline index not too badly hit, but I'll tell you what, the breadth of the market has moved in favor of the bears. Well, Mangalam, we're seeing a bit of a pullback. We're seeing those dips getting bought into, but it appears Santa's making a quick entry and a quick exit as well.
The colors of Christmas both, right? You know, green and red, they're all showing in the stock markets in today's trading session. Let's see where it goes from here on. It has been extremely volatile, and you know, the chart up on your screen tells you exactly the nature of that volatility. Earlier we had more stocks advancing, then we had the stocks narrowing out, and now we have more stocks declining. And still, who's to say that line may not crisscross once again? So we'll keep an eye out on that, even as the Nifty currently down just about 10 points. If you look at the intraday chart of the Nifty, it'll tell you what a roller coaster just the first hour of trade so far has been itself. So in a roller coaster market, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Today we have Nitin Agarwal joining with the stock. Nitin.
Hello, the company that I have chosen for today is Endurance Tech, which is an auto ancillary company supplying to the two-wheeler segment in India and in the passenger vehicle segment in the European market. First, let me touch upon its last quarter number. The company reported a strong YoY growth of around 14.5% in top line, driven by the sharp recovery in the domestic market. Its EBITDA margin expanded primarily on the back of operating leverage. Now, there are a couple of factors that make us upbeat about the company. First, the company is approximately on the growing two-wheeler market in India, and company supplies to who's of the industry, and there has been a sharp demand pickup in the two-wheelers in India. Further, the company has a strong order book. It has a cumulative order book of around 2,900 and it has a replacement order book of around 870 crore. In addition to that, the company has an order book of around 232 million euros from the European business. Apart from that, the company has been taking steps to improve its EBITDA margin. It has been taking some it is working on the cost efficiencies, and the raw material prices have been benign, leading to the EBITDA margin expansion, as is evident from this financial number. In terms of valuation, the company currently trades at around 29 times FY27 projected earnings, which we believe is very reasonable for a company like this.
All right, that's an idea of profit coming in from our colleagues at Money Control Pro. But let's talk about another stock on our radar, Syrma SGS. The electronic manufacturing services space, the EMS sector, has seen massive valuation re-rating over the last 1 to 2 years itself. That's the view coming in from BNP Paribas. They expect that the favorable government policies have aided a sector's growth, and brokerages too believe that the higher valuations may sustain if the earnings growth momentum remains strong in this space. So in this backdrop, joining us now is electronics manufacturing services company Syrma SGS Managing Director Jasbir Singh Gujral joins in to give us the details of company's growth plans and business outlook at large. Thanks a lot, Mr. Gujral, for joining in. You know,
Thank you.
Wish you season's greetings. You know, just first up, I wanted to understand, you know, you had guided for a revenue growth of anywhere between 18 to 25% this year. The first half, or rather, you had guided for revenues of upwards of 45% this year. First half of this year, you've done 52% revenue growth, and margins in the last quarter were around 9%. Could you give us an updated guidance for this year when it comes to revenue as well as margins?
This year we had guided for a revenue growth of about 40-45%, which translates to anything between 4,400, 4,500, and EBITDA margin of 310 to 320 crores. By and large, we stand by the guidance. I don't think there'll be any changes in that. the margins would be there. The revenue growth, if the market mix, the product mix changes, the revenue growth may see a minor up or minor down, but we stand by the EBITDA margins of 310 to 315-20 crores.
All right. Hi, Mr. Gujral. Good morning. Good to see you, Ben. Could you tell us what is the maximum sustainable margins, X of PLI, X of profit and, Forex moves? What is the sustainable number in terms of margins?
See, we have guided 7% this year, and we stand by that margin even for the next year at the minimum levels.
Okay. At the maximum level could be?
Maximum level, see, if the products in the coming years, when my exports pick up, my exports are currently about 25%. We are targeting 30% for exports, 33% as exports. Now, whenever those more profitable, margin accretive verticals see a consistent rise, then the margins have a potential of inching up northwards. But
how much can the...
as a conservative thing, we stand by 7%.
All right. So two-part question here then. This 33% exports happens when? Does it happen in FY26, FY27?
It could be 27. You see, because the domestic business is growing at about 70-odd%.
Right.
The exports are growing at about 20-odd%. Last year, they grew at 26%. This year, it will be about 20%. So till the domestic demand is that high, the additional incremental revenue coming in from exports also has to go up that higher. Okay. I think we should be there at 27% in 26, 27, certainly not in 25, 26.
Got it. And 26, overall, if you could give us a sense of what revenue are you projecting in FY26 on an overall basis? This year we have the numbers.
I think that if we do about 4,500, 44, whatever, on a conservative basis, even if we take about 30, 35%, so we should be doing anything between 5,200 to 5,500 crores. That would be the target for next year. The plans are in the making, and we'll come back with that. But I think about 5,200 to 5,500 crores of revenue with 7% of EBITDA, which translates into about 375 to 400 crores of EBITDA.
All right, Mr. Gujral.
Yeah.
Mr. Gujral, some part of the street is expecting that could possibly be some large order that's coming your way. Could you confirm or deny that? Something's in the works is what the buzz is, and it could be a rather large order.
Let's count the chickens when they are hatched. That's my standard thing.
Could they be hatched before the end of this calendar year?
No, I'll tell you, see, we have had a major order breakthrough where the supplies in this year, FY24-25, have only started in October. So I have 5 months of revenues from that global customer. Now, even at that level, if the levels don't go up, no new products are added with that customer, next year I'll have a 12 months window for the revenue.
What vertical is this customer in?
This is industrial. This is industrial.
Okay. Okay.
Industrial export customer in USA.
Okay.
So this year we'll see about 25, 30, 35 crores of revenue around that. Next year I expect this to be maybe 3x, maybe 4x.
From a single customer.
3x. From the same customer.
Got it.
The same customer. Yeah.
Got it. All right. But we have to wait by to see whether or not there's another fresh order that could come about. For the time being, you're saying this customer will ramp up properly. Got it. Yes. Tell us a little bit about the smart meter installations here in India. What is the current smart meter order book outstanding? And for you as a company, what should you do? Smart meters as a percentage of your total mix. I think in the vicinity of 200, 250 crores should be that be a number?
The smart metering, RF metering, we are very strong in it, and we have been doing it for the last 15 years. This year, in the first 7 months, I don't have the figures for November. I think for the first 7 months, we have done upwards of 1.45 or 1.5 million meters. The electronics for the meters. And currently, because of the elections in Maharashtra and other things, the market is seeing slight sort of a push out, which I think in the Q1 of FY25 or Q4 of FY25 will come back to normal levels. And I expect to do about, I think, 2 million meters this quarter.
How much?
Sorry.
How much does it cost? How much does 1 meter contribute in terms of revenue?
It depends. You see, if it's a single phase, three phase, so it varies. It varies. But I think my energy metering business or the utility metering business should be about 250 upwards of 250 crores.
250 crores for this year, and next year how much? And
Next year it should be upwards of 300. Upwards
All
of
right.
300. Yeah.
Thanks a lot, Mr. Gujral. That's all the time that we have for you today. Though we're not out of questions, we'll obviously touch base with you once again when you, count the chickens when they hatch. We hope that happens very soon. Wish you good luck for the remainder of this year and the next year as well. With that, we'll take a short break. Come back, get you more on the markets and stock-specific action on the other side. Stay with us.
Welcome back. The metal index has been the biggest loser this week, but in the last few minutes, we've seen a bit of an uptick. So from the lows of the day, there's a recovery. Nalco has recovered, Tata Steel as well, just to name a couple of those stocks that have seen a good recovery. But let's address some of those flashes that were up for you on the screen. The oil ministry is seeking a higher compensation for under-recovery of sale of domestic LPG in the budget session. Sapna Das, she's been on top of that. She joins in to fill us in with more on that. Sapna, take it away.
Hi, Nigel. So this is an issue that has been building up since some time now. Just after the Q2 results of the oil cores had been announced, we had all noticed around 17,500 odd crores were the LPG recoveries at that point in time. There has been no domestic pass-through in terms of the domestic LPG price cylinder. Of course, commercial cylinders, now and then the prices keep getting tweaked, but nothing much on the domestic cylinder. So basically what is happening is that the under-recoveries in a way have been piling up. So if you were sitting with an estimate of under-recoveries around 18,000 crores end of Q2, now the under-recoveries will be much higher. What we are given to understand is that probably it's higher than 25,000 crores. So if that's the case, then, it's very natural that much compensation, fiscal compensation will be sought, or cash compensation will be sought from the finance ministry, and that's exactly what has unfolded. It remains to be seen how much of this is taken on board by the ministry. We have a big example of way back in FY23, 22-23, just after the Ukraine war broke out. So around 30,000 crores had been given as a demand at that point in time for LPG under recovery, and the companies had been given 22,000 crores. So that's the kind of background that we need to keep in mind. But the amount is higher than 25,000 crores.
Got it.
Slightly even more than that, maybe somewhere around 30 odd, just to take an educated guess at this point in time. That is what is pertinent at this point in time. Thank you.
All right, we take that point. Thank you, Sapna, for joining in and giving us those details. With that, let's move on. Let's talk about the CNBC-TV18 growth code for empowering investors and traders and prominent investors as well as professional traders. They gathered at Grow's Trading Right event on November 9th to share their valuable insights and strategies. Here's a snippet of Arjun Tandon, who is a partner at Kailasa Capital Advisors, sharing his thoughts on the risks of trading with small capital. Listen in.
Let us say anybody who wants to do option selling. तो ऑप्शन सेलिंग में लगभग 1.5 लाख लगता है पर लॉट. अब अगर आपको इन सारी चीज़ों का बेनिफिट उठाना है, आप चाहते हो कि मैं थोड़ा डिफरेंट इंडाइसिस में काम कर लूँ, थोड़ा पोजीशन साइज एक्स्ट्रा रख लूँ, तो मुझे लगता है 10 लाख 15 लाख इंडेक्स के लिए आपको चाहिए ऑप्शन सेलिंग. उससे कम में आप जाओगे तो इट इज़ डिफिकल्ट टू सस्टेन. सी इम्पॉसिबल कुछ नहीं है, हर चीज़ प्रोबेबिलिटीज़ की गेम होती है. प्रोबेबिलिटीज़ आपके अगेंस्ट होती जाएंगी जितनी छोटी कैपिटल के साथ आप मार्केट में आ रहे हो. अगर आप सेम ऑप्शन सेलिंग स्टॉक्स में करना चाहते हो तो नेचुरली आपको डिफरेंट स्टॉक्स में पोजीशंस बनानी पड़ेंगी. कल को किसी भी स्टॉक में कुछ भी न्यूज़ आ जाती है तो वो आपके अगेंस्ट जाएगा. तो स्टॉक्स में अगर आपको पोजीशन बनानी है तो आई फील 20 लाख के आसपास आपको चाहिए, सो दैट आप एक डिफरेंट नंबर ऑफ स्क्रिप्ट्स में आप ट्रेडिंग कर पाओ.
Welcome back. A stock that's doing well right now is Titan. But remember, Titan has completed 40 years of existence in the watch business itself. Earlier today, I spoke with Suparna Mitra, who's the CEO of Watches and Wearables business, on the business outlook for the year and the 40 years of watchmaking at Titan itself.
This company was incorporated in 1984, and we are celebrating 40 years of joy with all of India, all of our customers. So to celebrate this, we have actually come up with a very unique collection, a commemorative collection, and there are 1,984 pieces across 4 variants.
How's demand right now? I mean, the third quarter typically is strong because of the festive season, the wedding season, etc. How have you seen demand on ground? What kind of products are selling more?
So demand continues well. Mangalam, we had posted pretty good results in Q2 at about 19-20% top line growth and fairly good bottom line growth. And the growth momentum continues. And the big news, of course, is premium. Our premium brands, Titan leading the way, powering its way. And also the premium formats like Helios and Titan World doing exceptionally well. All our premium brands, Xylus, Nebula, Titan itself, Braga, I think these are the ones that automatics in general really very good demand through the festive season as well as now in the wedding season.
But apart from watches, I have to veer into wearables as well. How has that trend been right now? Are we seeing a bit of a slowdown in wearables, or they continue to grow the way you aspired it to grow?
Well, the whole wearable smartwatch category has gone through a significant correction this year, and a lot of, I think there was an oversupply, and it was a necessary correction. We are, of course, working our way on it, but I'm happy to report that overall we are doing well given the situation of the category.
And about Helios, your third-party watch retail business, you've launched a couple of showrooms. What's the plan here? So
we have had Helios for more than a decade. We have about 270 Helios stores across the country. What is new is actually we are trying to go into some new format called Helios Lux, which is what I think you're referring to. We have had a couple of stores opening. We're still kind of getting the fine-tuning, the concept. Again, great response. We are doing really well. We are very excited. Our customers are happy. Our brand partners are happy. It seems to be a win-win situation.
Okay, while, I would like you to celebrate the 40 years of horology at Titan, let's also look at the next 40 months, next 4 years, and next 40 years in terms of growth outlooks. Obviously, 40 years would be too far-fetched to, comment, but the next 40 months and the next 4 years, how do they look?
So for us, we have a fairly, I think, well-structured and seasoned strategy and approach for the analog watch market. It's been about more than a year. We've actually done a separate mainline analog business vertical and a separate premium watch business vertical. That is working out well because we have individual teams that are focusing on different price points, and all of that is coming through very well. I think from the channel point of view too, we have upgraded and renovated many of our exclusive brand outlets. We have about 685 Titan Worlds that are doing really well. Fast Track stores are doing well. The multi-brand retail outlets are doing well. So it's a very, I think, happy situation where many of the engines of growth that we have put in place are firing well. And we are looking forward, excited about a lot of innovation and a lot of good, solid on-ground execution.
Interesting conversation, but on that note, we'll wrap up on this edition of Chartbusters, my final one for 2024. But Mangalam and the team will be taking you through all the action on Chartbusters all through the end of this calendar year. You stay with us. Trading Hour comes up next.